Good evening, ladies and gentlemen. Today we're going to be talking about what happened Monday, January 30th to the market, along with the bull and bear case for the future, along with any news catalysts that be coming our way. But before we get to the video, quick legal disclaimer. This is not financial trading advice. Do your due diligence in the market. All risk you take in the market as your own. Remember, you put yourself in the trade. No one else did. Now let's get into the video. What a crazy Monday it has been in the market. We gapped down on open, pumped up almost straight to break even. We failed to fill the gap about by 0.2%. That's a rough estimation. And then once we hit 405, which guys, we've talked about this price point too, we're blue in the face. This was nearing where we came up, kind of consolidated previously in the November, December region, especially the CPI pumped sell off down. We never held this region. And again, today we failed to hold this region after getting rejected off of it. Remember, previous support that's broken now becomes resistance. We came up to this region, got rejected off of it, and never looked back. Now, we've been talking about this 50 weekly moving average in almost all our deep dive videos. Link down in the description below if you guys want to check those out. And if you guys could hit the like button if you are enjoying the content so far, greatly appreciate it. That helps out the YouTube algorithm. You saw today we had touches on this 50, popped up, came down, pumped up, came back down. On the third, coming down, we broke it, had a doji, and it was basically never being able to break back above it or the market close. However, we are above this because futures do trade 23 hours a day. Those are, you're seeing the post-market 401.68 on SPY. That's probably from futures. I wouldn't expect maybe that price to stay the same into tomorrow's open. We could be higher, we could be lower. Let's get into the bull and the bear case of where we could see the market going from here, and then my own personal thoughts. Bull case is we did maintain this channel that we've been in for quite some time. So that channel can be drawn right here from the low about here. So you're trending in this channel, but towards the low side. We're expecting a bounce in this region. We are still holding it, especially in the futures market. So there may be some hope to some upside here. If we clone the channel again, we have something that looks exactly like this. So we do have some more upside testing. And what's coincidental is where this channel starts to hit our 410 region. Why is 410 important? This is where we had our previous CPI massive gap up, sell off down. So that is previous resistance, is also where we rejected off of the 50 the last time. And one of the things that I spoke about in the weekend deep dive video was that when we broke above this 50, I wanted to see a retest. If I was going to turn bullish on the market, full disclosure guys, I'm pretty bearish on the market. I wanted to see a retest of this 50 and I wanted to see us not look back. I said I need to see one, volume, and I need to see big candle, 5 minute with volume pushing up. What do we get today? We got 1, 2 touches on the 50. This is a very weak push. The volume didn't really increase from the previous candles. Red and green down here are about the same. You then, once you started basing around this area around 1 o'clock, you then broke through the 50, a nice solid red candle through it. That's strength on the bears. And then you had no looking back. You are above it now, like we mentioned. So there is maybe some life left in the market. Now for the bulls, like we said, they're in a channel that's bullish. You haven't broken this channel. The trend is your friend till the end. So you have some upside testing that you could be doing. You could retest 405. You could try filling this gap and head higher to 410. That's very possible with some of the news items that could be coming out tomorrow. So let's take a look at that real quick. So if we look at the news items that are coming out or tomorrow, nothing really stands out besides Chicago PMI and consumer confidence. Consumer confidence most likely is going to head higher, which is going to be bullish for the market. Chicago PMI, that's really been a bullish sentiment the last 2-3 times it's come out. So I don't suspect anything to change with that. So that's in the court of the bulls, and they could possibly run this market as high as 410. I would say I think 410 is where is the iceberg of sell order sitting that I don't believe in one day we can penetrate through. I think you would need a J-Powell style catalyst to penetrate through that. Now, if we look at Wednesday, boy, oh boy, like we talked about during the weekend, ADP non-farm payroll change we got on Wednesday, ISM manufacturing PMI. It is a jam-packed day, JOLTS job openings. This is going to be an insane day. And if it wasn't insane enough, we got the FOMC statement, Fed rate decision, and FOMC press conference. Wow. This is going to be a crazy day. So if you are bullish on the market or you're bearish on the market, you have a high probability of your position being blown up on Wednesday, because the market can move and break both the bulls and the bears at the same time when in a very quick stroke. So now we talked a lot about the bull scenario and what they could do. Now let's quickly jump to the bear scenario and then my own thoughts. So the bear scenario is you broke through a key support that is really in your court. You now need to see continuation downwards and not looking back. You need to break this channel so that we start heading downward. Then you start retesting these lows of 393, possibly even 396. Afterwards, I would like to see 391 itself and 390.67, which was a long-term area of support before. I would like to see what happens in those price interactions along with what we interact at 394 to 393. We're coming into that bullish golden cross scenario that could actually fail to cross over. I don't personally trade off of those golden crosses, deck crosses, because they're a lagging indicator of confirmation. You already know the move that's been happening. They're just confirming the price action that you're seeing. So it's not a tradable indicator for me. Other people may disagree or have different opinions. If you do, throw it down in the comment section below. Now, if we see the market from a bearish situation, we look at how hard you've been pushing. You pushed up, came down, pushed up, came down. So now the question is, do we push up higher and then come down, or do we just come down? So the bears have the onus now to push the market lower, and we have to see Tuesday. And this is where culminates into what I'm going to talk about for the market and the theory that I have and some of the scenarios that could play out. So let's get into that real quick. So scenario number one, I do believe that the market is heading lower, but how do you create a volume capitulation leg? What causes a volume capitulation leg to actually happen? Is people running for the exit because they have so much endured pain that it's going to be an absolute nightmare for them to hold on any longer? They don't see a light at the end of the tunnel. And I did mention in the weekend video, I do think the bulls are going to be screaming bloody murder at the end of this week. Now, this is that scenario. I think you pump up tomorrow. I think Chicago PMI causes you to go up into Wednesday. I do believe that their bulls are being psychologically programmed to buy every single dip. If what we mean by that, you pushed up, you should have had consolidation in this region right here. This region should have been consolidation. The bears came in, broke down. So what happened? Bulls bought 1, 2, 3, 4, 5, being the wick, bottoms on the market. So now they have to buy number 6 tomorrow, and bulls are willing to buy these bottoms for the good or for worse. And my curiosity is going to be what happens tomorrow. Tomorrow will define if one of these scenarios plays out. If this is a bear trap, then I would expect to be red tomorrow. I would expect the bulls to allow the bulls to push down and then trap them down there, getting them all excited that they've won, trying to break these lows and see if we can trap some more bears to fuel the rally higher through 410. That would be very bullish because you would be squeezing out the bears at a key resistance level. You would then have the momentum to push up. Now, if you're green, why do I say that's bearish? You have a resistance level here that you bounced off of. Everyone's going to see break resistance. They're going to ignore all the dip buying that has to where you're getting over leveraged. You're then going to head higher into Powell. And let's just remember something with Powell. Just a few months ago, Powell said it is very premature to be thinking about pausing. That was Jerome Powell, November 2nd, 2022. He was one of the first to say that, and then had all the other Fed chairs reiterate this in the last 2-3 weeks when they came out to speak. And everyone's expecting Powell to come out and give this pivot speech. Too many times people rely on an event to save them from their position. If you're not confident in your position, you look for another savior to save you from the position. What I see in this market is bulls getting over leveraged. I see them buying every dip regardless of the news. Like this run up here was on non-catalyzed news. Why would we do that? What incentive would we have to go up here? If you have a green day, you push up. Once you have more bulls, which is the final loading of the bulls, because they have been psychologically programmed to buy every single dip. Let's just look how massively they're being psychologically programmed. First dip, bought it back up. Second dip, bought it back up. Third dip, probably gonna buy it back up because they want you to think that the dip always gets bought up. If you look at 1, 2, 3, 4. So if we buy this dip, that's number 5. That's number 5, bought back up. Now what? When the dip comes in, everyone's gonna have recency bias, and we're gonna say, oh, the next day they'll buy it back up, and then the next day it doesn't get bought back up. You just head lower and lower, and that is how you start a volume capitulation leg. When there's no relief in sight, and then you go to denial, you go to anger, and then you go to volume capitulation. At that point, everyone runs for the exits because they can't take any more pain. Now, scenario 2 is you have a red day, you drop the bears, you push up higher, break through a catalyst. And also I would be curious to see, and we can talk about this tomorrow on tomorrow's market update, where after seeing Tuesday's close, this is going to be a hindrance on Tuesday's close. If you're red on the close, I'd be very cautious going into Powell. I'll probably not be taking any bearish positions until I hear Powell speak. And another indicator that we can look out for is the candle when the interest rate decision is announced. If Big Algo's big money, $1 trillion, is going to flood into the market, you're going to see a 2% candle in 5 minutes. A single candle will be 2% with massive volume behind it. That will mean that Powell most likely is coming out to give you a Fed pivot speech. Or option number 2 is when the interest rate decision is announced, it forms a massive up move or a massive down move and really just wicks out, where you're just trying to shake out anyone that's trying to short or dip by the opportunity, and you wait for the press conference. If that is, I would be suspecting we get this type of pivot. Yes, I'll pivot from hawkish to more hawkish. We talked about this in the weekend deep dive, and afterwards the market will absolutely send itself down. I do think the Federal Reserve is going to pivot from the stance of looking at inflation to now jobs. And jobs are a significantly harder metric to crush, and the market understands that. So now then they're going to rug pull the market in a beautiful way, where they're not looking at inflation and now jobs, because everyone's been hyper focused on inflation. They look at the jobs market and it's a roaring, we're back to 9% inflation mentality of the Fed's going to crush the market there. It's got to hate rate hikes. We're not going to get cuts, all these things. So we have to be very cautious going into tomorrow. I would not be looking for the move down. I'd be looking for the move up to confirm my thesis. If we have a move down, I'm severely going to be scared for Powell's move, of what he's going to say, and I'm going to be very receptive to what he's going to tell us, not trying to put words in his mouth. A lot of people misunderstand. You have one move in the market, ignore it. Listen to what Powell's saying and then think, has that changed from what they have said? Look at their summary of economic projections. That will tell you what they're looking at. And that's the insights I have for you guys today. If you guys like this type of content, subscribe, throw a like on the video, and also if you have time, put a comment down below of what you liked, what you'd like to see changed. We're looking to improve these videos for you so that you can take advantage of them. And with that, I bid you farewell.